there are a lot of things to learn. Yeah, it doesn't only allow you to master the markets, but it allows you to master how you can manage other other situations that do happen daily in our day-to-day life, how you can manage your businesses. Personally, if I'm to venture into any business, I look into how the risk is and the reward. I don't just look into that. Someone tells me that business is beautiful, so I look and then I just invest. I look into the risk to reward. Then I then I analyze and come up with its risk to reward what risk to reward ratio, and this helps a lot whereby it enables you to run your business whereby even if you are targeting small profits, but as long as those profits are what those profits are consistently made, the business is still there. Not to just start a business, you want a lot of profits. Instead of giving customers good quality products or good quality services, you want to earn you want to you want to earn a big you want to earn big, and at the end of the day, that affects your customer base, and you start losing customers. But when you run your other businesses according to the knowledge that you mastered in forex trading, it gives you peace. It gives you peace, and to make sure that you focus on quality. In forex trading, is what we call focusing on quality trade setups. So, focusing on quality trade setups, it's all about making sure that um, you give quality trades. Yeah, making sure that we only look for quality trades. When I talk about quality trades, I mean buying from support with confirmation, selling from resistance, and prioritizing one thing, trend, following the trend, not just come into the market, make money even tomorrow. Here you can make thousands and thousands of dollars in 1 week, but keeping that consistently will be difficult. Okay, like you can make profits consistently, thousands and thousands of dollars in 1 week, trading against the trend. But then that will not be guaranteeing you your long term success. So for long term success, we have to prioritize following the trend. And one other thing, which I would like to every trader here, prioritize risk to reward ratio. Prioritize risk to reward ratio. Yeah, prioritize risk to reward ratio. I'm going to next week. Next week, I'm organizing a 2 days seminar, which will be free for everyone to attend, whereby we shall refresh about all these things. We shall handle market structure, price action, and then risk, and money management. Um, why I'm emphasizing that always stick to risk to reward ratio, because when you manage how much you are risking on an order and how much you are targeting to make, that will help you to grow the discipline. And actually, not only that, but it will help you to protect capital. Sometimes we forget to apply stop loss. We fear applying stop loss, but stop loss is very important. Whereby stop loss, it controls the amount of money you can lose, and whereby you can protect capital. And when you protect capital, you get good opportunities. The market is here to stay, it's not going anywhere. So, as long as capital is safe, you have controlled your risks, good opportunities will always come. Good opportunities will always come. So try to make sure that you prioritize risk to reward ratio. I do recommend risk to reward ratio of a minimum of 1 to 3. Yeah, 1 to 3. If you're risking $5, your take profit should be looking forward to make $15. And by the way, I realized that it's not so good like for people or like for someone who hasn't got more used to um, trading risk to reward ratio, so that for him or her to be trailing. So if you haven't spent some good time in the market, I really do recommend you analyze the market um, before you enter. Look for where you are going to put your stop loss. After placing that trade, give it stop loss and take profit. When you give it stop loss and take profit, then you can close your phone, go do other things, go do other things. Then come back to see that either the market hit profit, take profit, or stop loss. Or the best that you can do, only breaking even when at least the order is in 2 times what you are risking. So prioritize risk to reward ratio. And when it comes to risking, I don't recommend you risking beyond 3% of your capital. You should have a controlled risk of, let's say, like 2% risk, 2% of your capital risk per order. And don't open many orders. You should have a maximum of 2 orders. Maximum of 2 orders. Why? You can open several orders and you make money, but then it will not be allowing you to do what? There you will be maximizing your risk, and it will not be helping you to grow. So focus on one trade, unless when you have closed it, then you can open another one, and then also have a trading plan having the maximum risk you can risk per day. If you are risking 2% per order, 2% per order, that means you to get 2% per order, you just get 2% divided by 100, then you multiply by the capital you have. So if your capital is $500, 2% would be $6. So meaning that if per entry you're risking $6, your take profit should be in $18. Looking forward to make 18 orders per order. So when you happen to have one order hit take profit, two order hit, second order hit take profit, you find that you can even just have two good trades, well analyzed trades, and hit take profit. Or if let's assume that it's been a bad day, 3 orders have hit stop loss, you would be in a loss of 6%, 6% in negative. But that's a controlled what? That's a controlled risk, meaning that you come back the next day, opportunities always come, opportunities always be there. The only thing that you don't have to forget is making sure that at least for every loss that you have got, analyze and see what costed you to go into that loss so that you can avoid it next time. I called one of our colleagues. He had WhatsApp to me whereby he was entering trades, and these trades whereby he was not calculating the amount of risk he was risking, and was like stop loss would be just too near. So I analyzed his trades and I realized that he was using adjusted somehow bigger lot size. So to make sure that you have, by the way, when it comes to stop loss, you should have a stop loss whereby that your stop loss gives the market a breathing space, meaning that if you see, when you see that 0.03 is giving you a tight stop loss, which is so near to the market, you adjust you adjust stop loss to 0.02 or going straight to 0.01, so that you can have a stop loss which gives you a good which gives you order a breathing space. You see gold, gold it's a beautiful pair whereby if it's to follow that trend, it rallies that trend. But the challenge is that sometimes it retraces a bit. You find that it retraced and it removed you and then moved into what? And then moved into your direction. So to avoid that, just have to make sure that we, if we see that the lot size you're using gives you tight stop loss, adjust it so that just adjust your stop loss. Sorry, you just minimize on the lot size so that your order can have breathing what so that your order can have a breathing space. It doesn't mean that if your capital is $300 or $500, you should use 0.3 or 0.5. No, you can adjust to a small lot size or 0.02 or 0.01. Or if your capital is $500, you can adjust you can adjust your lot size to 0.03 or 0.02 so that you can have a breathing your order can have a good breathing space, not to just have a tight stop loss whereby the market will remove you when it's making a retracement and then it goes into your direction. But when it comes to maximize prioritizing risk to reward ratio on every trade that you take, speaking this out of experience, there are some of you here, I emphasize you to stick to that and it's been generating you results. When you stick to prioritizing risk to reward ratio, and then you be reviewing every 10 trades, every 10 trades, and you're having a maximum risk per order, let's say that of around 2% or maximum 3%, maximum risk 3% of your capital. When you keep having risk to reward ratio, having controlled risk, and also having the maximum daily drawdown. But when you're using risk to reward ratio, risking 2% or not beyond 3% of your capital per order, you also make sure that you have the maximum drawdown, the maximum loss that you can have. Yeah. So the maximum loss that you can have a maximum loss of, let's say, 6% of your capital per day, or maximally, I would recommend 9%. Meaning that if it's 9%, you are going to find that one order you're risking 2%. Okay, you're going to find that um, three orders you'll be risking 2% of your capital. Three orders, then one order you'll be risking 3% of your capital. So when you happen to have one order hit stop loss, second order hit stop loss, third order hit stop loss, fourth order hit stop loss, as long as when it hits the 9% of your capital, then call it a day. But then, like when you happen to be in a scenarios whereby you happen to have three consecutive trades losing, then don't continue trading that day. Call it a day, revise your trades to see what went wrong, get back the next day. You'll find that you'll be protecting your capital and then you'll be growing slowly. It's just a matter of time. You cannot become a great profitable trader in just a month, or in just a few months, but it's a continuous journey. It's a continuous journey of not giving up, of really learning from every mistake and making sure that every trading day is a lesson. Every trading day is a lesson. Don't just analyze, even if yesterday you made money the whole week, the next week don't just come and just enter anyhow. Still, just keep calm. Even if you made $10,000, just keep calm, reanalyze to see that you find the same entries that you found last week. Apply risk and money management, enter the market, have a controlled risk. You find that you'll be protecting your capital and your skill will also be doing what? Will also be growing. Last year, I always tell you this that let's do, let's give in all our efforts, all our best into this skill, not for the better of us, not for the better of us, like to make thousands and thousands and millions of dollars, but for the better of our next generations to come. Yeah, because I'm sure that when you have mastered this skill, and then you have a child of 14 years, you start um, training him about certain things in the market, you find that that child will be picking faster, faster. By the time that child will be getting to 18 years, he or she will be able to make some good money from the market. I do have two kids of my elder sister, and every time they are having holiday, I do train them. So they always like they used to be asking asking for pocket money every time when they're going back home. But so what I do, actually, those kids, one of them is 13 years, another one is 14 years. So what another one is 15 years. So what I did, I told them that no, because right now they can analyze market structure and find they can know that this is support. The market will be entering from here, will be buying from here, and they know how to apply risk to ratio because it's very easy. Where you're risking $2, your take profit should be in $6. So it's very easy. So I told them that what I did is that I gave them demo accounts to trade. So the one who performs well on the demo account is the one I give more what? I give more upkeep. Is the one I give pocket money for school. And the money that they make on the demo accounts, I give them into what? I give them into cash. So I've been monitoring these demo accounts to see how they performed, and I evaluate and see how much I'm to give them. But you find that this motivates them to make sure that they are ever looking on the charts instead of wasting time on TikTok, Facebook, just wasting time there, watching movies all the time. At least they've been doing that, huh? They have to trade, they have to analyze, find some entries so that they can grow their profit portfolio so that they can get some good pocket money when they are going back to school. So you find that at the end of the day, these kids they be mastering things faster. They be mastering things faster. Right now I've been focusing them more on to mastering market structure, and then in their next holiday, I'll be starting to put them into candlesticks anatomy, knowing that what big candles represent, what small candles represent, slowly, slowly. And so that at least by the end of the year, they can they know how to, they can find at least three candlesticks, they know how to find them, engulfing candle, inside back candle, that and the dodges. So you find that with the time, they're just still in primary. They're just still in one is in primary, one is in S1. Yeah, so the one who is 13 years is in P7, and then the other one who is in 15 years is in S1. Yeah, so you find that it helps them to be giving in more effort, and by doing this psychologically, um, I'm making sure that they master the market, so that at the end of the day, I can give them real accounts and they trade. So master this skill, giving your best for your next generation. For your next generation. Even though we look forward to see that we can make millions and millions of dollars from the markets, but let's see, put in more efforts for our next generation so that our kids don't just go out there looking for jobs. We start empowering them when they are still young. By the time they get done with the campus, at least they can. They're already making some good money from the markets, and someone will not just come to them giving them small jobs giving jobs giving what small salaries. By the time they'll be getting done with campus, they just be telling their colleagues, you know what, I'm not looking for jobs. Yeah, and that's very possible. I'm a living testimony on that. I never looked for a job, and I wasted my 3 years at campus, but good enough, I made my parents happy because all they wanted is to see me graduating. But then I focused on what I believe will serve me, will enable me to grow, and also enable my next generation to expand. So kindly give in your best, no matter the challenges. Don't give up. Don't give up. The reward is worth the sacrifice. The reward in the market is bigger than the efforts and the sacrifice that we do make. So kindly try to give in your best. Don't give up. Keep pushing. You'll get there. Yeah. So we have had so far over 30 minutes of food for thought. Yeah, but it's something which is very important because where the world is heading, uh, the what the employment field keeps on becoming bad and bad. You find that you spend a lot of money educating a child, and at the end of the day, when he gets done with campus, he gets paid 400,000, six, even if it's 600 or 1M. That child has to find rent, has to also save something. He has just got out of campus, or has to also enjoy his life, have fun, hang out. Yeah, so let's try to make sure that we give in our best in these skills so that we can extend it to our next generation. Yeah, so now coming back to our today's weekly analysis. Um, I I was off the market, yeah, but then the last what the last 2 weeks I got back in the market, and I've been trading, I've been analyzing, I've been following gold, and gold, just like I've always been telling you, gold is very clear. Um, it's still, let me first remove this indicator. It's still in the buying trend. Gold is still in the buying trend. This is week one. When you come on week one, um, we have our trend line support here, and then our trend line resistance around there, trend line resistance around there. So you find that gold had to form this retracement. This selling move, this selling movement had to come in because the market had reached its trend line resistance, and after this strong rejection on week one, the following week had to sell seriously. Yeah. So last week closed with a price action confirmation, which is tweezer bottom, and tweezer bottom. They do communicate that chances are high that the market is going to reverse. It's going to reverse the direction from which it was taking. So when you look at these two previous candles, they were selling candles. Now after the formation of these tweezer bottoms, they communicated that we are likely to have buying weeks ahead. Actually, this week is closing. I'm seeing this week closing with a more buying confirmation. Yeah, so gold on week one. Last week he gave us buying confirmation, but due to this rejection, which came towards the end of last week, this week had started whereby it's selling a bit. But according to how last week closed, we do expect buyers to we do expect this week to close whereby it's having more buyers than the sellers. Now coming on D1, still we are in a buying trend. D1 still we are in a buying trend, but our buying trend has formed has formed our buying trend has formed a consolidation market within it. This is a buying trend, but when you look here, we have these swings, swing high, swing low. Actually, these are equal highs. Then this is a swing low. So, being the fact that we already have two equal highs, that confirms us that we are in a sideways market. And according to week one, we saw that last week closed with confirmation, which is confirming us that the market is going to buy. We are likely to have buying weeks. Yeah. And now on D1, here we can see that we have our support here. And past days have been selling seriously, and the market sold up to our support. This is a support basing on this swing low. So we do expect this market to be buying more for the next days. And looking on how the price formation is, when today closes with a price action buying confirmation, which is will be likely to be an inside bar, then tomorrow will be major a buying day. And as per what we saw on week one, which closed with a to the bottom, we do expect uh, towards the end of this week too, from Wednesday, Thursday, Friday to buy more. Then next week we'll buy more. Why next week we'll buy more? Because the market, after closing with a price action buying confirmation here, is going to be targeting to move towards this resistance here on D1. Yeah, it's going to be moving towards this resistance because currently we are in a sideways market structure or consolidation market structure. So that's how D1 is. It's a simple market structure. I believe everyone can see it. Have swing low, swing low, two swing equal highs. Then now the market reached this resistance, sorry, this support, and now sellers were rejected, and now buyers are taking control of their territories. Yeah, so that's how D1 is. Now coming on H4. H4, it's the same thing. H4 still we have this support. It is this support on D1. It's in coordination with this demand zone. This is a demand zone, whereby after the market reaching this demand zone, we'd expect buyers to push this market towards the next zones. And I can see we are having this zone, and we have also a zone here. So buyers are targeting here. That is 328, 3,281. Sorry, 3,281. So when buyers break through 3,281, then their next target will be 3,338. And when they break through this, their next target measure will be going back towards this. And as they keep going beyond each level, they'll be targeting to go and create an all-time new high. Yeah, and I gave you a longer-term analysis. Last month or it was in March, and we saw that gold was targeting 3,500. Actually, that was by what? Um, by July or June or towards the end of the year. But then you can see that it has moved even beyond that. So, according to the way we see gold right now, gold is targeting over beyond 3,500. Actually, it's targeting right now. Its major target it beyond is to go beyond this level, is to go beyond and break this. These are psychological resistance around 3,500. So gold is major target after this retracement is to come break through these zones, this and that. Looking forward to break this. This will be in coordination with the 3,500 zone resistance. Looking forward to go to 3,700. Yes, so we are still in a strong bullish market, and we have seen that the market reached the support zone on D1, and even last week on week one gave us confirmation that we are likely to have buying weeks ahead because it closed with a tweezer bottom. Yes, so it's still a clear buying market, and right now, if today closes with a price action buying confirmation, then tomorrow we shall be buying more. So for all your trades tomorrow, look and see how yesterday closed. But according to the wide analysis, we do see buyers taking control of tomorrow, Thursday, even up to Friday, looking forward even to next week. Yeah, because their targets right now are the first target is 3,281. Then when they break through here, they might buy, then form some kind of small retracement here to this support, because this will have become a support. And then after there, bounce off there, bounce off here, and then buy looking forward to this target, which is 3, which is 338. Then when they break through here, the next target will be 3424. Looking forward to going beyond 3,500. Right now, in simple words, you can see that buyer's major target is this. This is the major target for buyers. Actually, it's going beyond, okay, reaching 3,500. And as long as the market is still trading um, above 3,224, don't. Oh, my battery is getting off. As long as the market is still trading above 3,224, don't look for sales. Keep looking for buying opportunities. Unless the market closes below 3,224, that's when you can still look for selling opportunities.